Welcome to today's webinar, courtesy of the Kentucky Small Business Development Center right here in Louisville. We're all about hooking you up with free, super secret business coaching and training services. It doesn't matter if you're just dipping your toes in or gearing up for a big expansion. We've got the goods, the tools, and the know-how to help you win. To get the scoop, cruise on over to LouisvilleSmallBusiness.com or hit us up at 502-977-5800. Big thanks for tuning in to today's webinar. Feel free to drop your questions or chat it up with our speaker using the chat feature. Let's dive in.
Welcome, everyone. Thank you for joining us today for Toolkit Tuesday. We are joined here today with Sheri Radler as our guest speaker. She is the owner of Our Accounting Group. Sheri, welcome. Thank you so much for being here. Oh, sorry, I think we were on mute.
Yep. Thanks for having me.
Yeah, absolutely. And tell us a little bit about what you're going to touch on today before we get started.
Okay, well, as we go finish Q3 and look ahead toward the year end, it is time for all business owners to take a little bit of housekeeping, a little bit of time, and let's make sure our business is in the right position, right shape to wrap up the year with.
Absolutely.
So we're going to just walk through some of those areas that we encourage our clients to take a look at and focus on at least annually.
Wonderful. Well, I can't wait to get started. In the meantime, if you could drop your name in the chat at the bottom of the screen, that would be great. We love to know who joins us today. You're also welcome to drop questions in the chat box, and we will answer those at the end of the presentation today. Hello, welcome. All right, I'm going to hand it over to you, Sheri.
Okay, so let's just share our screen here. 1 minute. And we should be teed up. Everyone sees the right slide?
Yes.
Okay. Well, thanks for having me again, and really want to appreciate everyone for taking the time to walk through today's seminar. And we are going to be discussing preparing our business for year end. It is a crucial time for business owners, and we just want to make sure that everyone has the tools and the knowledge needed to wrap up the year successfully. So I'm Sheri, and I am the founder of Our Accounting Group, and I and my team are all corporate escapees. We have left the corporate environment. We come from worlds of small business to global organizations, but all of us have opted to come back to our roots, and we work directly with privately managed organizations. And one of the reasons we did this was, especially for me, going through my career with private and public accounting, really found that a lot of business owners just were not utilizing financial information and that same decision-making capacity that we were using at the corporate world. So rather, they're using it as just to get sidelined as a tax necessity. So we focus on working with business owners to really illuminate the potential of what the financial data can provide and what kind of information is already within your books that can sometimes lead to developing and finding more money and opportunities within your business. So at Our Accounting, we are business consultants first, accountants second. We bring our accounting and operational expertise to the fore, and just the idea of trying to advocate for our clients so that they can understand a better position of their business and decoding how their daily decisions and general practices really are interconnected to a larger pieces of their overall financial puzzle. And as we all know, beyond the certainties of death and taxes, accountants and business owners recognize that year end is the precedent of tax season. So that is another thing that comes around annually. So closing out your year and ushering in a new one really does require that the business owner take some time and focus on their books, their financials, their business overall, because there's so many deadlines that come in the first quarter of the new year that we want to make sure that, that we're not rushed trying to do it. So rather, Q4 is a great time to take a look. Today, we're going to focus on 4 key areas. We're going to look at our books. We're going to discuss HR and payroll. overall regulatory and compliance, and as well as evaluating and determining your performance and your goals. Overall, these 4 pieces, not only provide insights for decision making, but it actually helps provide information that can help foster sustainable growth and profitability in the long run. Books analysis is where it starts. Navigating the business without financials is like flying blind. And it's shocking to us how many business owners actually admit that they do not look at their books or their financials often. They don't reconcile their accounts or go through their financial packages with their bookkeeping. And truthfully, we really, want to emphasize that your books are more than just your numbers. It's a deep dive in how your operations are performing, and every decision you make in the field, in the office, flows through to your numbers. So it does tell a story of how your business is operating. So by analyzing your books, it allows you to educate and enhances the information you have for decision making, and actually helps you develop a chart of where you want to go to ensure that your business is not only going to survive, but that it will thrive. No one got into business just for, to not be successful. The place to start, of course, as an accountant, we're going to start at the books. So we're going to dive into the areas of the books that we always want to encourage our clients to look at, because your numbers tell the story of your financial health. So, and in the world of finances, accuracy in your financials isn't just about the numbers. It's actually about the credibility and the trust and the confidence that your shareholders have in relying on the data that you provide to them. So first of all is the error evaluation, because errors or bad numbers can affect the rest of the story. So we are looking for more than just typos. These are pitfalls. We're looking for overstated revenues or lingering liabilities or duplicate transactions, items that made their way into our books that upon a deeper review, we've come to realize that they were not accounted for properly. One that we see quite often is a business owner will generate an invoice for a sale, but when the payment comes in, rather than applying the payment against the invoice is brought in as a deposit. So now our revenue has been counted twice. We have an outstanding accounts receivable that has already been collected. So just that simplistic of a misapplication of a deposit can have reverberations throughout your financials. And how do we find those errors? Well, for us, it's the account reconciliations, because the account reconciliation is the core of it. This is how we confirm that every transaction, every penny, everything that went through your books is represented on a bank credit or loan statement, and that everything that is on one of those loan statements, credit or bank statement, is represented in your books. And only by comparing these two sets of documents can you ensure that everything is within your organization's books. Now, once you have reconciled everything, it's helpful to read that unclear transaction report, because this is telling you the items that are in your books that have not cleared a bank account. So now this allows you to find out why. Why has it not come through as expected? Was it a duplicate? Did the payment not arrive? Was it misdirected maybe to a different bank account? So by addressing not only the account reconciliations, but that tees us up to be able to investigate what is in the books that have not cleared. And those are those yellow flagged items that we encourage you to look harder at to understand why they are in your books. Of course, once we find them, we want to go back and correct them. Entries are like puzzle pieces. If one piece is out of place or missing, the entire picture is distorted. So anything that is in your books incorrectly, it just changes your numbers. So making sure we've accounted for it, we've reviewed it, and then we fix it is critical. At year end, businesses should also undertake, we recommend reviewing your accounts receivable. Right now is a great time. The longer receivables remain on your books, the least likely you are to collect those. So reviewing what is out there, following up with your customers, making sure payments are on the way. And then if an account has been deemed to be uncollectible, let's make sure we write this off by the end of the year. Because optimizing the write-off, it's not only helping your tax liabilities and insurance, ensuring your compliance. It's not just the letter of the law, we're maximizing your financial potential. Reviewing accounts receivables, we already touched on that just a little bit. We want to take a look at what is on our books, what is unpaid, what is outstanding, because these are two sides of the same coin. It shows what do we owe and who owes us. So reviewing both to ensure that those numbers are accurate, really, it assists with cash flow planning as well as the financials in your books. So it's, as we said, it's not just all about the numbers. All of these tell a story, and each one of them are a piece of the process to making sure that the story it's telling for you is the accurate story for your business. The last part under the financial aspect is, now that we've reconciled our books, we've looked at all the data in our books, let's analyze that information. Let's take a second, some time, go through it. So the end of the year is a perfect time to take stock of your business's health and performance. The financial statement trinity of the balance sheet, income statement, and cash flow serve as the basis of the evaluation. The balance sheet shows you a position of time. It shows you where you are as of the day it was printed. What you own, your assets, what you owe, your liabilities, translates to your equity, the overall value once your liabilities are settled. While your income statement actually is covering and addressing your operations over a course of time, generally a year, but it shows you month by month, day by day, trends and analysis of what is going through your business and what does it take to run your business. So the financial statements become a mirror to the activity. So they help identifying the profitability. They show you where your funds are coming from, and they can help pinpoint areas of improvement. Monitoring your financials for sudden increase. What if, variances in materials can really provide early warnings to financial challenges. If your prices are here and your suppliers' prices have exceeded that margin, all of a sudden you can find your gross margin really squeezed if you're not keeping up with the cost and revenue cycle of how your suppliers are impacting you. Also at year end, we encourage our clients, we want to do an inventory review. Let's take a look at what do we have? Is it obsolete? Does anything need to be written off? Is everything that is reflected on our books still valued and usable out in the warehouse or in the plant or in the facility? Ensuring that anything is still usable and accurate, evaluating the condition of our equipment and goods to determine whether repairs or replacements are necessary. These type of things really can help in the last quarter, because obviously if it comes to a timing, should we purchase in the end of Q4 or beginning of Q1 is not an easy question. A lot of people ask that about tax time, and it really is a depends. But at the same time, if there are areas in our inventory that need adjustments, adjusting those prior to year end is advantageous for our balance sheet. We want clean numbers. How's our supply levels? How's our gross margin percentage? Are we monitoring the supply levels to ensure operations and making sure, we're not facing any disruptions? How is your pipeline for deliveries? Are you maintaining, as it has gotten longer over recent years, are we making sure we're keeping the orders and our business operations forecasted out to make sure we have those supplies in the pipeline to come back to us? And all of these help with profitability. And profitability remains the core goal for every business. And the 3 ways to enhance profitabilities really come down to the same 3. We can reconsider our pricing strategies. Is it time to raise pricing? Can we focus on our sales strategies to boost our volume? And then third is scrutinizing and streamlining our expenses to eliminate inefficiencies. So as we were saying, the year end, it's not just the routine process. It's really a powerful tool as we use it with our clients as a way to really look at how they've done and use it as a baseline for the sustainability, forecasting, and build out that we're doing it for next year. So making a priority of this in Q4 can really help set you up for a successful year ahead. As we leave the financial areas, we're going to move to the next section. So beyond your books, human resources. It's not just about hiring and firing. It is the cornerstone of your organizational infrastructure because it plays a key role in ensuring that your business is operating smoothly. It's a driver in your business efficiencies. And truthfully, we want to ensure that we remain in compliance. So because failure to be in compliance with many HR or state regulations can actually result in a monetary impact to our organization. So making sure we conduct an HR review annually is imperative. It really helps you understand what is going on in your world with the changes of employee laws, record keeping practices, policies, and making sure we understand what we need and the impact on our workforce. Part of that is, as the year draws to the close, is evaluating your staffing. How has it gone? Is your workforce aligned with your budget? Was your strategic objectives met? How did it suit your day-to-day operational demands? Having the right talent in the right role can significantly boost your efficiency and overall success. So as you reflect on the end of the year, ask yourself some questions. Did you have the adequate staffing to meet your present demands? Looking ahead, are you equipped for next year in terms of manpower to achieve your goals? Are there areas that you might need to reduce or adjust to optimize your overheads? And what about restructuring certain roles or departments? Are there any shifts that need to be made to tap into an individual's unique skills? Put the right person in the right job and you can see magic. The wrong person in the wrong job, well, it goes the other way sometimes. And then, of course, not only is understanding our head count, well, let's think about our budgetary considerations. What is going to happen on the return of investment when we bring on a new team member? Estimates are that it takes 6 months for a new team member to get up running and to be solidly, smoothly functioning in your team. So understanding the learning curve and the investment that it's going to take to get someone up and running and not waiting too long to hire if that's what's in your forecast. Also, let's look at the broader landscape. Are some roles, are there apps or technology or industry specific features that can actually help streamline your organizations that maybe you can retrain and bring improvements to your organization like that just by opting into some of the efficiencies? However you do it, it's time now to strategize, plan, and ensure that your staffing choices will bolster your mission for the next year. Still within the HR and payroll world, we have to start focusing on our people. It's not just about the numbers, it's about making sure we're competitive in our marketplace, and more importantly, a place where our team members feel appreciated, valued, and supported. Retaining and attracting and keeping our employees is more important than ever. So evaluating your position in relation to the market is crucial. Recent events, the prolonged impacts of this great resignation of ours have really brought to forth the importance of understanding your competitive edge. And let's look at what some of that is for 2023. Employees or consumers are making way more choices based on companies that prioritize humanity over profit. Companies that put their people first are not only gaining reputation, but they're seeing an increased loyalty from not only their employees, but also their customers. In this post-pandemic era, flexibility is more than just a perk. It is now a necessity. As of April's 23, about 62% of U.S. workers ranked flexible work hours as one of the top 3 items on their list. And interestingly, over 50% of businesses have now adapted by implementing some sort of staggered or flexible work schedule into their world. So this has been deemed as one of the largest labor force shifts probably in our lifetime, and it is going to continue. When we speak about keeping up with our people and treating them right, that also brings us into benefits. Benefits, health insurance, PTO remain as forefronts for employee priorities. And staggering 90% of respondents to a workforce survey really indicated that these benefits are not deemed as perks, but really deemed as indicators that an organization views them as valuable contributors toward the organization and not just as cogs to a machine. So these type of initiatives are not only boosting your reputation, but will be key in helping to retain top tier talent. So as you assess and evolve your compensation and benefit package, making sure that you're staying updated, adaptable, and human-centric is going to be a way forward. And how do we incentivize our people? It's how we reward and recognize. Our strategy has to be comprehensive, and it should incorporate both monetary and non-monetary incentives. This ensures that your team is not only rewarded for their dedication, but also motivated to align themselves with their company culture and values. And it's not just cash bonuses. While monetary incentives, of course, undeniably can boost staff engagement, we've seen time and time again that this is a valuable perk for employees. But we as business owners have to offset these fixed costs against what can be sustainable in the long run. So on that side, the non-monetary incentives can really be helpful to a business. Scheduling flexibility have garnered appreciation, as we mentioned. However, not only do employees like it, it's been documented to reduce stress, reduce call out, reduce time taken in PTO. So those flexible work hours that can seem negative on the forefront have proven to be some positive aspects on the backside. And research has shown that the year-end incentivization, tried to get that one. It not only improves the employee productivity and morale, but it can actually shape your culture. We've been fortunate in our firm. We've experienced very little turnover, and it's a blessing because, as every business owner knows, starting over again, it just takes time, and sometimes time is the least thing we have to give. Some of the other employee benefits we talk about with our clients are professional development, courses, workforce, or workshops, or even stipends to allow your team to participate in networking or some type of community events. Health and wellness programs, gym memberships, things like that. Remote work opportunities we've spoken about. Mentorships, that is one thing. People working remotely feel that they lose that opportunity for that mentorship. So pairing seasoned professionals with newer employees really can help foster their growth and bonding into the organization. So both types of these incentives, they're not just rewards, but they are strategic tools that when implemented thoughtfully, can really help drive your success as you want to work with your team. And the last part of our HR is ensuring that we have reviewed at the end of the year to make sure our personal employee payroll information is correct for the legal compliance, for the financial reporting, for tax planning, for W-2s, all of that information that needs to come out. So a nice fundamental practice is to, in Q4, ask your employees, review their employee file. Make sure they're set up properly. Do they need to make any changes? Now's the time to do it. Have them correct their W-2s. Ensure any present employer, any withholdings that you've done for fringe benefits, end-of-year bonuses, deferred compensation payments, anything like that needs to be sure to be processed prior to the last payroll of 2023, so it is included properly on their W-2. You also need to make sure your employees are aware of benefits that might be expiring, such as a PTO or an FSA account, something that has a loss or a carryover, a use it or lose it policy. Anything, so let's make sure our team is aware of that. Those of you with retirement policies, plans are starting to get the paperwork from your retirement group. It's time to send those notices out to our team, advising them of the protocols surrounding your retirement plan, the annual notices. And that takes us to the regulatory compliance. Now, this is midway point. So Claire, is there any questions or anything at this point?
Let me check here. I know we've gotten quite a few positive remarks about flexibility in work schedules and remote jobs and things that are all necessary in our day and age. So I think we're all on the right page here.
Perfect.
Yeah, keep going.
Okay. Regulatory and compliance. This is one that truthfully, people forget. We see this time and time again, that rules, laws, ordinance changes from year to year. So taking the time at the end of the year to make sure that you are up to date really can be helpful as an audit, because you want to manage your legal compliance. We want to mitigate our risk. We want to make sure we're ensuring our financial integrity. Are we safeguarding our reputation? It also promotes the transparency and efficiency of your business. So what does this mean? Well, every organization, ask yourself the question, what are the key compliance issues that if we were to run afoul of could put us out of business or set us back? And then the next question is, what are we doing to make sure we don't break those rules? Those two questions pretty much sum up what a compliance risk assessment is all about. It's all, which is why conducting an annual audit or evaluation or your processes is just smart practice. It's like a routine physical at the doctor or a review of your retirement portfolio. It allows you to spot weaknesses or areas with potential down the line. I'm going to sidetrack just a little on that going back to the HR. This was a year in which the state of California rolled out multiple changes. Everything from an employee has to be paid their final check on the day of, to raising workers' comp, limits of liabilities. But it's like, as a business, if you're in California, you're not keeping an ear out to all of these policies going through, you're afoul without even realizing it. And when you are caught being out of compliance, that tends to come with penalties and fines. So the areas that we always recommend that we review for an audit for compliance, you have to determine what is relevant to your business. And some of the industries do require more than others. General places to start are, have you compiled your documents for your tax group? Do you have your 1099s? Have you reviewed your vendor and lender's paperwork? Have you confirmed your W-2s are correct? If you're an S Corp, are you notating and holding your annual meetings and notating your minutes each year? Because failure to hold an S Corp annual meeting could pierce the corporate veil. But quite often we see that kind of mess. Oh, sorry. 401ks, the next one. There's annual reporting required. You have to turn in hours, matching, the 5,500, your TPA is going to do some testing for you. That's a big one, making sure that your 401k match has been calculated properly and applied across the board correctly. Annual reporting, not only for the state of Kentucky and what other states you might be operating in, but it's also for various regulatory agents. And quite often, it is surprising how often we get a new client, and one of the first stops we make is the Kentucky Secretary of State, and the failure to file the annual report, and the business has been administratively dissolved by the state, and they're still operating, not understanding that the state had closed them based on failure to file a $15 form. Charitable renewals, true ups, state, Ohio Bureau of Worker Comp requires an annual true up. There's just various ones, but they are all required. And then, of course, our licenses, operating licenses, business licenses, local license, fire department permits, health tax registries, occupational professional licenses. Do you have people on your team that need to renew their credentials? All of those, if they're working for your business and under your header, you need to make sure that they are complying with their regulatory licenses at all. So it's important. You have to ensure that you have these documents. Are they accurate? Are they complete? Do they comply with the current standards, the tax laws and the regulations? They also can help you understand where you're positioned at and maybe make some decisions on whether you are still needing to be licensed in these areas. Sample was, we had a client a year or so ago, and they were licensed in like 15 states. They've closed down offices in the Northwest, but they were still licensed in Colorado, Washington, and things like that. We ended up closing those licenses because they were no longer operating in those states, but they had been paying those fees ongoing, not realizing it. And security. There's not enough words you can put about security these days. Accounting security is essential for protecting your financial information, the compliance, financial loss, safeguarding the reputation. If you are taking payments online, are you PCI accredited? Have you turned around and, have a good cyber policy? Are you working with your IT group to ensure phishing and that your team is getting tested and trained on what should, be done? Security is also going to make sure we scan and save documents as we walk away from credit cards or payroll providers or relationships at institutions. You walk away from that legacy information. So making sure that you're downloading your statements and your bank statements and you're saving them to a drive is very important. 1 in 10 companies get a virus every month. And in 2021, I think it was, every 14 seconds, a ransomware attacked a business. And as a small business, we are the targets because they are finding the back doors. They find it appealing. They think they can get in. So if you are doing anything online, please make sure you are making sure you are backed up, secured, your IT group is working with you. 30% of the businesses in this country admit to not backing up their devices. Think of the shutdown you will have if you come in tomorrow morning and nothing on your computers work. It can have a catastrophic outcome. So conducting the audits on your company website, your cybersecurity, and your employee access at year end is also one of those areas that we want to encourage to maintain your efficient operations. It helps protect your sensitive data. It mitigates risks. It maintains the client's trust and confidence. So website, is it up to date? Are all the forms and links and hyperlinks on your website active? Cybersecurity, are your employees trained on how to identify or what to do if they feel like they got something that maybe looks fishy? Do they know where to send it? And access. When was the last time you ran an IT access and made sure only the people that needed access to certain areas had it? We often find, especially going in like QuickBooks files, because we're a QBO firm, so we come in and it's like, oh, do you know these people still have access to your QuickBooks? And they're like, oh, they haven't been here for years, but they still have a username and password so they could get into your QuickBooks if they want. So as they leave the company, making sure we're closing the door behind them is very important. And for our annual business review, understanding how we've done performance and goals is a valuable practice, both as an individual and an organization. It promotes personal growth, accountability, motivation, adaptation. But for an organization, it really helps identify a performance evaluation. How did you strategically align this year through how you set up and thought you were? You did budget planning, you did employee staffing. So reviewing, it's almost like an after action report, understanding how you've done compared to how you plan to do is very important. One of the guys I like reading is Simon Sinek. And if you've ever read his book, it starts with why. But he says that he really says that you should, as a business owner, we should stay focused on why we do what we do. Because just because we can do it doesn't necessarily mean it's our prime directive. So why are we in it? But I love him because it's the goal is not to win every battle, but it's to outlast the competition. So asking yourself the question why ensures your business is value led, and that allows you to make value based decisions. It allows you to understand your true goal of what we're trying to set. So as part of that review, we are first going to revisit our goals. You know, running a business involves keeping track of a lot, from the financial quarterly reports to where you set down your coffee. It's only natural that things slip away. So as you prepare to close the books for the year, this is the opportunity to take a look in the review and see how you've done. SWOT analysis, strengths, weaknesses, opportunities, and threats. What did you set out to do this year? What challenges did you face? What skills did you learn? What mistakes did you make? And how do we avoid making those same ones next year? And for when we've done something really well, how do we repeat it? That works. Let's do it a lot. Every business that offers a product or a service to our consumers should do the yearly review is a great time to understand how your business is functioning. Are you overly reliant on a single customer or a single vendor? Maybe some diversification is something you should be looking for for next year. So understanding these areas can really be helpful. How is technology changing? Using the Blockbuster analogy, we all know, VHSs worked great until they were replaced by. So keeping an eye on what your industry is doing and making sure you're staying up with those is always recommended. We're going to crunch the numbers. We've talked about that before. Let's take a look back at your annual sales data. How did it do this year versus last? If you review it by quarters, can you start seeing trends by seasons or quarterlies? Part of developing your business plan will likely involve a market analysis. Who are your competitors in the region? Who are your horizontals and your verticals? Who works in an ancillary capacity that maybe you can reach out to and develop a referral relationship? Much of what you discovered when you first came into your business and your market probably still holds true. But not everything has gone according to plan. Nobody's plan survives first contact. So as you review it, it's helpful to identify the various factors that can have an impact on your market. Are the customer needs changing? Is the economy changing? What's the competitors doing? And while most of it on a review does look historically, how have we done the last 12 years? This is also the starting place when you want to build out your budget for next year. Well, based on last year, what we see looking forward into our crystal ball, this is what we're going to plan for. So think about laying realistic financial goals. Whether you're looking for doubling your profits or hoping to gain a percentage point or two, having that target always helps, because you can only, what is it? You can only measure what you've tracked or something to that degree. Solicit feedback from your team. Ask them what they need to become more effective, more productive. Do they have everything they need to do their job successfully? And then from a non-financial goal, what are the values? What are we trying to, what is the life we want to lead? What do we want our company to stand for? What do we want to provide for our clients in the way of services? And weave those goals into our business model as you work through your financial review. And here's the, this is your report card. Evaluating the performance at year end is that practice. So if you have met your goal, what was the factor that allowed you to meet it? When did you meet it? Was it the 12/31 we hit our goal, or hey, we blew through that goal by mid-year? Should your goals have been more challenging? Were smaller goals? So maybe you didn't meet your big goal, but break that down, SMART goals, specific, measurable, attainable, relevant, and trackable, were the steps broken down and accomplished? And if you didn't meet your goals, what was the driving factor for not? Did you overestimate your plans? Or were you just totally off base? How close were you to making the goal? What needed to have been done for that goal to have been met? And what actions might you shift in order to meet the next one? And then we're going to plan. New Year's coming up. Set your dates, set your targets, utilize the tools on your calendar. But I really strongly advise every business owner going into their business should have an idea of what you're trying to accomplish. Because if you are just showing up to do the task of the day, I would never leave emails. But it's that if you don't have that big picture, you can really get lost in the forest here and not make sure you're on target for your long-term goals for you and your family. And that's going to take us to budgeting. We really advocate budgets. How else can we go budget versus actual? It's just a way of, this is how I thought it was going to go, and this is the way it really came up. It's also helpful for working in tax strategies that maybe your tax group has worked with you on, developing financial practices that will promote effective finances. All of these are activities that can help provide a roadmap for your business. And all of this is the ultimate goal. We want to contribute to our financial stability and the success of our business, which will then help us bring more wealth and profits into our homes. So create the budget for the upcoming year. Incorporate staff increases, raises, incorporate changes in your sales model, customers. Look at what's going on in your expenses, your insurance, your IT, your advertising. Determine what some of those costs are going to be the next year. Certain vendors should be reviewed every 3 years. If you haven't gone out and repriced your insurance in the last 3 years, suggest doing it. It's not that you're going to leave your agent, but just making sure you are competitive to the market is always encouraged. And in Q3, we always encourage our clients to take the Q3 package we provide them, send it to their tax person for a review, because Q4 gives time for changes. We can increase an owner's pay more taxes, make changes in the business. But waiting until next spring to tell your tax guy what your numbers is, that just results in well, if I'd only known about it, we could have done this for 23, but for 2024, let's do it this way. By sharing your tax package to your provider right now, it gives them the opportunity to say, hey, I see some things we could do to put you in a better position for this year. So now in Q4, let's do this, X, Y, and Z, move the needle and put yourself in a better position. So we all want to be in a better position for next year. And that's really it. So, as a wrap up, as I was saying, our firm is dedicated. We work directly with business owners that are committed to growth and having a forward looking perspective of their business. And we really do understand that for all you business owners, this is a job. It's a unique challenge. Business owners, the ones that have employees make up less than 3% of the overall companies out there in small businesses. So you guys need tailored support. You need ongoing collaboration, but you can have a team and a group around you that can help you achieve the vision for your future if you want it. And there we go. SBDC, Claire and Janet's group, they work with everybody on this kind of stuff.
Yep. It takes a whole system of support, right, Sheri?
It does.
This was a fantastic presentation, really driving home just so many of those important pieces that you can very easily lose sight of in the day-to-day. But always working on your business, not in your business, is what we say.
Right.
All right. You have now definitely generated some questions here. So I'll get started. So Cassandra asks, and this is an interesting question: how many people do we need to manage all of these different areas? And like you just said, Sheri, many times you are the person, correct? So kind of maybe how would you delineate these different tasks between yourself, between an accountant, any things you could pass off to other folks in your company?
Yes. So we work with a group of professional service providers, and while you may not need all of them every day, as a business leader, surrounding yourself with that round table of experts that can help you. Because unlike big corporate, when I worked for Global, the
Mhm.
C-suite was literally made up of a team of people that we could bounce things off of and figure it out. Too often, a business owner sits in a room of isolation, and I have to make a decision, and I may not know everything about it, but I have to pick something today. So I picked this.
Yep.
You really have a friendly relationship with your attorney. We are your accountant, so we handle the accounting side. We work with your tax group. So quite often it is your attorney, your accountant, your tax group are your top three. We also work closely with an HR group here in town, because second to financial malfeasance, running afoul of an HR law is the second fastest way to get yourself
Yeah,
out of business.
absolutely. Yep.
So, but for us, it's typically a group of four, that
Okay.
we just have on tap.
Wonderful. Someone else is wanting to know how to get in touch with you. So I'm glad you have your email right here and phone number, and you can always look up our accounting group as well. Let's see. David asks, I have read about a report called Beneficial Ownership Info. Is that still expected to be filed in January? And then is this new in 2024?
I have not heard of this report.
Okay.
There is a new one, and it may be this. If there's common ownerships across multiple organizations, there is a new reporting requirement coming. So I think this is the report that he's naming. It is
Okay.
not quite out, and I've only taken the faintest look of it.
Got it. And then the second part of his question: if a company scans credit receipts, bills, invoices, etc., are hard copies still required?
No, the IRS says that you must maintain a copy of the information, and we are real paperless people.
Yeah.
Scan it in, make a folder on your drive, 2023, a folder for each month, toss them all in there. We suggest a naming convention, because when you have to go find that receipt, if you just scanned them all in as scan one, scan 501, you're going to be opening a lot of receipts. Take the time. It's Home Depot, October 23 for $69.70. Get you a long way when you are looking for it.
Yep.
But no, as
Absolutely.
long as you can provide a physical copy, which a scan can be, because you can always print it back down, you do not have to keep. Now, for those that don't want to scan, go get an envelope, those manila
Mhm.
envelopes, put a month on, throw them all in, stick them in a Xerox box, keep them in your closet for 7 years. And every 7th year, toss out the oldest year and kind of keep going.
Okay. Some other folks are asking checklists for these areas, but I'll jump in and say we record all of these, so you're welcome to go back and rewatch, take some notes. Sheri, I don't know if you'd be willing to share the slides afterwards, but the recording of the webinar will be available to you.
Sure. And we have some of these checklists, so I can always go through my lead magnets and get just kind of my presentation background and
Great.
library and just see what do we have.
Yeah, that would be great.
Yes. Some of these helpful checklists,
I know.
document retention policies, W-2 versus a 1099. Yes, ma'am.
Right. Jody asks, we put all of our expenses on credit cards and then pay that. Is that okay for receipts?
The IRS does not say that your credit card statement, they do not accept a bank or credit card statement as a supporting document, because all that indicates where you spent and what. It doesn't give the granularity of what was the purchase. So you would want to keep those credit card, or you would want to keep those receipts somewhere.
Okay, great. And then let's see, it looks like one more question from Aaron. You advocate for QuickBooks. What are some other good financial accounting platforms?
Okay. I do advocate for QuickBooks. We are very Intuit based, and this year I'm actually part of the Intuit Council. But I will be honest, until about 10 years ago, I had never used QuickBooks. I came from big corporate, SAPs and Great Plains and JD Edwards. So QuickBooks was new to us, but is a very powerful tool. I will tell you, especially the levels. We are a QuickBooks Online firm. And however, Wave is an excellent program if you just need very, very light bookkeeping. It is free. It does not have all the bells and whistles, but if you have a small holding company or an LLC out there, Wave Accounting is a solid platform. I've not done a lot with Xero, but Xero is absolutely a very well-respected organization in the industry. Very similar to QuickBooks. It's like your QBO or Xero, it's
okay.
If you're working on an online platform in a firm, those two tend to. We've not had anyone outgrow QuickBooks. We're running $15 million companies on QuickBooks. QuickBooks as your financial hub is a pretty good, but you can step up. NetSuite is a great one, as well as Accounting Suite. And Accounting Suite actually allows some options that QuickBooks does not. There's a couple industries that QuickBooks and Intuit will not work with, like the cannabis or CBD world, and Accounting Suite will.
Okay, that's interesting.
So, yeah.
And one other question, is it good for S-Corp status? And Aaron, I don't know if you need to clarify. Are you talking about, is QuickBooks good for S-Corp status or one of those other platforms that she just mentioned?
So S-Corp is a tax status. Every business tends to get set up as an LLC. LLC is a legal designation. An LLC then opts to be taxed as a sole proprietor to your 1040, to a partnership if there's more than one, or you can opt to be taxed as an S-Corp. So every S-Corp, partnership, and sole proprietor is an LLC, but not every LLC is an S-Corp. It's just a taxation perspective.
Yeah.
It helps create that segregation. It really strengthens that segregation between personal and business assets is one of the reasons.
Yes, very important.
Depending on some industries, we mandate it.
Yeah, exactly.
No, you do not do that as an LLC.
Yeah, absolutely. Well, I'm not seeing any other questions in the chat. Thank you all so much. And Sheri, this was absolutely just a great presentation. I will ask you all at the very end of the presentation, there is a survey that will pop up. So we would greatly appreciate if you could give us feedback for that survey. And this recording will be sent out to everyone that attended today. So you will get it in your emails, and it's just a YouTube link that you can watch again. And feel free to always reach out to Sheri or myself if you've got further questions.
Yeah,
Thank you so much,
And
Sheri.
you have a great day.
Yes, you too.
Bye, guys.